I'm going to be spending the next 6 hours with you focusing on you and your business. You know, in the last couple of hours, I've been looking at the responses you had of what you want to accomplish in this workshop over the next 6 hours that we spend together, doing this mental exerting work, this difficult heavy lifting, working on your business as opposed to in your business. And I'll tell you, I'm inspired and I'm encouraged by the things that I'm seeing. I'm hearing there's a lot of people that are concerned about their plan pre-COVID, what their business strategy looked like, whether it was on paper, whether it was just in their head, and what it looks like now. I'll tell you, here's the bottom line. You're gonna have to throw out yesterday's plan, pre-COVID business plan, not gonna work in this environment. It is a whole new ballgame. In fact, I was reading an article from the Kind CEO, those yummy Kind bars, and he said, you just really have to throw out your old strategy, and I couldn't agree more. We were sitting down with a client recently talking about his business now and where he's targeting, how he's marketing, where he's making money, and what he was doing in March, what he was doing in February. It is a different ballgame. And so my priority, my goal, my energy is going to be on focusing on how to help you create a business strategy that works in a post-COVID environment, all right? And I'll tell you, the reason I'm doing a workshop, this is it. I've listened to about 30 or 40 workshops in the last couple of months, you know, how to rebound stronger, all this stuff, right? And what I realized is I get on there and there's a lot of ambiguous, let's call it a menu, all right, versus a recipe of here is exactly how you do it. And as I went through and listened to the workshops, I thought, no, that really doesn't work. That might be what they taught you at the college, but when you actually get in the trenches, that doesn't work. I've tried that. And it kind of got me a little frustrated. And so I said, you know what, I'm going to get on and talk about actually what works, what doesn't work. And the other thing that drove me crazy about these workshops, and I'm going to tell you right now, is I'd get to the end of them and they'd say, and if you want the recipe, if you want to know exactly how to do it and how to really dig in and get it done right, then just buy this $900 course. And I'm like, oh my gosh, all the last hour leading up to a sales pitch, right? Not going to do that either. I'm going to give you the whole thing. Hopefully you've printed out your strategy guide. Hopefully you've got that in front of you. You've got 3 or 4 pens and we're just going to bust it out. You will leave at 6 hours from now, 6 weeks from now, 1 hour each week, you will leave with a business strategy guide that will work for your business. Now, in between those once a week meetings, there's going to be some homework. There's going to be some energy of working on your business, all right? But this works. I've built and founded and invested in so many companies that have used these recipes, this framework to have success, all right? So we're going to dig in and talk about that. So, if you follow the statistics of where we're at as far as the economy goes, we were basically at full employment before we got here. In February, if you wanted a job, you had a job. Now, of course, we went up to 15% unemployment, then we dropped down. Now we're at about 11.5% unemployment. That does not tell the whole story. You would think 4% to 11% were, 2.5, 3 times worse than we were. It's 5, 6 times worse than it was, one, because of how they measure unemployment, also because the ripple effect. There's a compounding effect. My wife and I were out last night for our 20-year anniversary. There was nobody. We were the only people on the street when we went home at midnight. And I'll tell you, even downtown Boise, where I'm from, it was just a tenth of the number of people we would normally have. So business is slow. Your consumers, they're going to be making less, many of them making less, and some of them unemployed. And this unemployment boost that we had, this little sugar rush where everybody got $1,200 and then they got an extra $600 a week, that starts to wear off. In fact, that's gone in a couple of weeks, July 25th, right? So we've got to look at what does that mean for our pricing, our strategy, who we're targeting, how we're targeting them. We're going to be talking about each of those things. Some of those come in the sales and marketing week. Some of those will come in the final week. But we will be talking about each of those things and how all of that, because I know a lot of your requests for what you wanted to accomplish out of this was, how do I market, how do I grow in a COVID environment? We're going to talk about those very things, all right? In a crisis, let me say this, because there's a lot of people that said, honestly, I want some inspiration too. And I'll tell you this is true for business, but to me it's inspiring, and that's this. In crises, I was on a walk with my son, my 11-year-old son, Lorenzo, and said, tell me how you feeling about this whole thing? Being home from school, all this, how's this affecting you in your heart and in your head? And he said, you know, Dad, missing my friends, missing my teacher. Crazy, I don't remember missing my teacher during the summers, but that's what he said. And I said, do you think God just shut that door right on your face? He says, yeah, it kind of feels like that. I said, do you think that if he loves you, he'd open up another door? You think other windows would open, other opportunities over here would open up? And we had a great discussion. What's true for an 11-year-old boy is true for a 50 or 60-year-old business owner, and it's this fact. When in a crisis, doors open, inventions, innovation is born. And innovation doesn't mean I created or I invented something. It means I found another way to deliver, to pair products, to create value. That's all that means. That's what most innovation is. It's not some scientific discovery or some new technological discovery per se. So we're looking for those windows and those doors to open. When you're looking for that, that's what you find. All right? So if I were to say, look around in your room, wherever you are, look around and just look for everything you see that's red. You see it? Take 3 or 4 seconds. Everything you see is red. Now close your eyes. Now think in your mind what in your surrounding is yellow. You thought you were looking for red. We're looking for the windows that open. We're looking for the opportunities. We actually just rebranded our marketing arm of our business because we see opportunities to invest in businesses right now. So we rebranded. If you've been following us, you'll see that it's now VC Strategic for this venture capital opportunity to partner with businesses to help them. We may do it with some and others pass on, but we want to help every business. Everybody that's online right now, we want to help. So in a crisis, we're looking for the windows. We're looking for the doors that did open. Anytime the universe shuts a door, another one opens up. All right? But also, when there's a crisis, when there's a squeeze, when orange juice is squeezed, or when oranges are squeezed, orange juice comes out. When you're squeezed, what is revealed? That's when your character, that's when your identity is revealed. You learn something about yourself. It's an opportunity for growth, for development, and that is of more meaning, it's of more lasting wealth than a short-term sugar rush or a short-term success. All right? Now, as we think about, and I just want to reprogram your mind for just a minute. I want to condition your mind for what we're going to be doing. This is important. I talked for a minute on working on your business. Not in the assembly line where you're working right next to everybody else, okay? Because when you're doing that, if you pay your employees $20 an hour to do that, and you're there working next to them, you're probably making maybe $24 an hour if you're 20% better than them at what you're doing, all right? 20, $25 an hour. That's it. When you're working on your business, that's when you're developing a pipeline, okay? So there's the bucket strategy. Think of a bucket strategy where I've got to get water from here to here, or oil, from Canada down to the Gulf of Mexico. I can either ship it with trucks or for railroads, or I could build a pipeline. If I build a pipeline, it is always there. If I have to use trucks, I have to continue to ship it. So if you have the strategy where you're using buckets to get water and move across, you're going to continue to do that. You're going to have a good job, but not a good business asset. We're going to be developing for you your strategies that will help you to develop an asset. The Millionaire Next Door, one of the books that I started, when I first started to read, that was one of the first books that I started to read. And I realized that the Millionaire Next Door, he's a business owner who has a business that generates wealth for his family. That is the economic engine. That's the golden goose that lays the golden egg, is the business, all right? So we're going to talk about how to turn your asset, or how to turn your job, your business, into an asset. Okay, Tawny? All right, so I want to talk, let me back up just for a minute, because there's a lot of people in the post that said, I just want to know who you are. And so I think I should answer that. I've heard PETA call me the Codfather. I'm the founder and CEO of Sequest. And so I don't mind being called the Codfather. It's kind of fun. We have some fun with it. But my story is this. I remember in 2005, 6, 7, buying property and just thinking, this is so easy. I'm like Donald Trump. I can buy something for $1 million and it's worth $1.5 million in a year. And it just seemed so easy. I had amassed 25 million in real estate. And I remember, that's 2007. By 2009, that dropped down to where my net worth was about negative $2.5 million. Now, it's interesting. when you have an experience where you realize a person that's holding a sign asking for food, yeah, he's got the sign up. When you realize that he has $2.5 million more than you do, it's an interesting, it's an awakening experience. And so that was me in 2009. I remember that. I battled through it, worked like crazy, and fortunately was able to get out of debt and just luckily avoid bankruptcy. And that was a blessing for me. I remember then, over the period of time, building this aquarium business. And then I looked at the last 5 years. Last night my wife and I, on our 20-year anniversary, we were on a walk and we were looking at a building that my friend owned. And the building, he paid $3 million for it. He had put $2 million in improvements. And in that period of time, he had spent $5 million and it became a great asset for him. My wife said, wow, that's a lot of money. And I said, now, Kim, I don't know if you have done the math on this, but if you look at how much we've raised and how much with our partners we've invested into Sequest, it's about $60 million. And so just a big scale. And so I know small scale, I know big scale, and it's been a great process for me to work with partners, with investors, with boards, with business owners, with other founders, with other CEOs, and just learn some great business strategies and the tactics that support those strategies, all right? So that's kind of my story. I remember a lot of people have called me during that time when we started to have to close our locations down, one after the next after the next. I think it was March 16th or 17th. 11 o'clock, hey, Connecticut needs to close. 1 o'clock, oh, New Jersey's got to close. Now it's 3 o'clock, Las Vegas has to close. It's 4 o'clock, Texas has to close. Just location after location just closing down. And I remember thinking, wow, now that all these locations are closed, we're going to be spending $50,000 to $60,000 per day feeding 30,000, 40,000 animals, whether we have any guests come or not. And so imagine now we're 100 and something days into this, burning 50,000, 60,000 every day. So I know what that feels like as well. So if you feel some pressure, you feel some stress, I can relate to that. I am probably going to conclude and tell you why I don't feel it so much this time. But I know how you feel if you're feeling like, man, there's some weight, there's some pressure on my chest. There's a fridge on my chest. I remember feeling that, and I've been there before. We had my co-founder. I'm a co-founder of a company called Blue IQ. It's a software that measures data in your business to turn that data into meaningful, actionable items, implementable ideas. Ideas, there's not a shortage of ideas, right? There's a shortage of implementation of ideas. So every one of these workshops that we have, they're going to be followed the following week. So today is 7 keys, all right? Now, think if you've got the golden goose at the end of 7 doors. Behind the 7th door is this economic engine that creates wealth for your family. And you have to have 7 keys to get through there. If you have 6 keys, what happens? You don't get to the golden goose. I put 7 keys, and as I look at these 7 keys, if you miss one of them, and you screw up one part of these 7, or you don't know, you just don't have that information, you don't have that scaffolding, that structure that I'm going to provide, you don't get there. So I've turned that into 7 keys, but knowledge is not power. The application, the implementation is where the power is. So next week at this very time, we're going to be talking about how to implement, how to execute. You've got a strategy guide, hopefully you've printed out, and we're just going to go through step by step the execution, the implementation. All right, so this one's the 7 keys. In 2 weeks from today, we're going to go over 11 sales and marketing strategies in an economic meltdown. Again, the games have changed, it's different rules, everything's changed. We're going to talk about what's working right now. The last, and then the implementation will follow that, all right? So in 2 weeks, we'll have that training, and then the following week, implementation, which I call IQ, implementation quotient. The following week, we're going to be going over 11 management and leadership methods for war times. All right, we're in war times. We're about to have a wave of businesses go bankrupt. 4 or 5 million businesses, you're going to just see them one after every day. And you hear about some of them, right? You hear about the J.C. Penney's and some of these Gold's Gym. Sheesh. I mean, it's getting pretty crazy. We're going to see a lot more of those. And so if I can help you have some framework so that you are not one of those casualties, I'm going to feel real good about that. That's one of my goals. Obviously, it's not just to survive. Ultimately, it's to thrive. All right, so that's what we're going to be talking about. All right, let's start with the big one. First, this is your pro forma. This tells you what your runway is. What does the financial forecast look like? Economists make forecasts, right? They're looking ahead and they're looking at leading indicators in stocks, in the markets, in interest rates, so that they can identify where the profits are going to be. Where will corporate profits be? And that will tell me the value of this stock and should I buy it or not. All right, they do the same. The real estate investors do the same thing if they're savvy, if they're astute. That's how they're deciding what to buy. As a business owner, when I'm developing my strategy, I have got to start with my financial runway, my projections. I call it a pro forma. All right. Follow us on VC Strategic, that Facebook page, and you'll see we do lots of downloads where you can have a pro forma template, or you can message us there and we can get you one. Most people, their CPA builds this for them, all right? Or you're a controller if you've got a controller in your office, or if you're really good with Excel. These templates are all out there. Each time I've sat down with a venture capital company before we became one, or a private equity company, I realized that that's where they started. In fact, that's where they started and that's where they ended the conversation. They would say, let's put in all the data. We want to see assets, liabilities, we want to see costs, we want to see revenue, we want to see the revenue broken down by department, we want to see primary revenue, costs associated with it, and then we want to see seasonality. They wanted to see all of it. Now, that's not how I had done that. Now, I had gotten businesses to $5-10 million before I met with guys like this in 2015, 16, 17, but I had not gone to 8 figures and then doubled it again until I started to realize some of these things, to really capitalize on assets, to really understand what I should be buying, what I should be leasing, what I should modify. That didn't happen until I really clearly understood and got reliable pro formas, reliable forecasts. That's really important for a couple of reasons. Let me go through what those are. So you think about who your collaborators are, who your team of advisors are. It might be a CPA, it might be a financial planner, it might be an attorney, it might be a couple of friends, it might be people in your business or partners. You want to share that with them, whether it's in the cloud, if you're not at the same place, or if it's in the same office, but you want to be able to have that right there. Your marketing people should have it, right? Your marketing people should understand the relationship between your spend in each category, return on investment in each category, and the return, right? Spend return in each category. So they need to be a part of that process. You need to understand those analytics as well. All right, now hear what I'm saying. We need to make sure that we're looking at accurate data. Here's where I start. When I say accurate, let me explain what I mean, because we're always guessing. Write down December 30, go ahead and write this down. December 31st, 2020. Money in the bank. And write down what that number is. Assuming you don't take any dividends, you pay yourself a salary because that's a cost. At the end of the year, how much money do you have in the bank? Now, get that number to where you are 80% confident that's how much money you're going to have, all right? So, 380 grand, I'm 60% confident. Well, let's take it down. 320 grand, yeah, I'm 80% sure we're going to get there. Okay, now between now and that date, how much money will I have and what should I do? If that number is 380 grand, should I be in August buying a competitor, buying a machine, paying off this debt? What should I be doing with that capital? Or if COVID has hit me and we're not doing well and I see that my runway, I'm going to have nothing in the bank in December, I'm not on the right path, then here's the deal. You can either beg or borrow or buy depending on your financial situation, right? So you might look at it in September and be like, wow, this is a real good opportunity for me. You know, there were times, if you look back 150 years, I was reading a book last night, it was pretty late actually, but this book talked about a guy who capitalized on the rains coming down so hard 130, 40 years ago that all the farmers wiped out their crop, planted again, rained again, wiped out their crop again, and so most all of the farmers had to sell their pigs, their cows, all their assets. And since all of the farmers are selling and there's only a few people with money to buy, what's that mean? The prices dropped because supply skyrocketed. So the people that had the assets, they were picking up stuff for dirt cheap. So what are those things right now? As I look at some of my friends that are really savvy business owners, they're telling me about these things that they're buying right now. I'm like, oh my gosh, you stole it. You literally stole that guy's lunch money, except for it was $6 million in lunch money. And it's because this asset that was $15 million 8 months ago is now at a fire sale, all right? Now, that was on a big scale, but maybe in your case it's whatever, 10 grand, 100 grand, $1 million, whatever it is, 5, 6, 7, 8 figures. You're looking for those opportunities, and you may or may not be in that opportunity. So it might be buy, it might be borrow. But here's the key. If you're on that trajectory where you're going to need to borrow, right now is the time to solve that. I've made, a lot of the ideas I'm going to talk about are because of this dumb mistakes I've made. Just didn't have the business experience. Read it in books. But sometimes it's just you have to have these experiences, right? I want to give you some of those experiences so you don't have to hold on to the electric fence like I've had to. I've been in positions where I had to raise money right when I needed it. For various reasons that as I look at it in the past, I think, geez, I don't know if I could have had the hindsight to be able to see that coming. But nonetheless, that's what happened. So you're looking at if I'm going to run out of money, I need to start looking, partner, buy, again, VC, money or a loan, lining those things up and preparing. One of the videos I did that's on on my Standard of Truth page, I talk about, I was listening to one of these I guess it wasn't a podcast, it was a webinar. And someone called in and said, hey, I can get this EIDL loan, it's 150 grand, and it's 3.75%. And the guy that was doing the webinar said, no, do you need the money? No, I don't need the money, I think we're fine. Don't get it then, don't take it, you don't need it. And I just thought, all right, look, if I'm a business owner and my business can't turn 100 grand into 200 grand in a year or 2 years, which by the way, if the money's being borrowed at 3.75%, you have like 20 years to turn 100 grand into 200 grand, right? And if you can't do that, you probably have to work for somebody and not for yourself. Because business owners need to be able to take capital and get a return on that equity. They need to turn 100 grand into 200 grand. That's how wealth is built. If you're watching a get rich quick, my studies this morning actually was from Galatians chapter 6. And if you read that, you'll see law of the harvest, this idea of, I'm just going to be able to go put money in Bitcoin or the stock market or real estate and become a millionaire in a couple of years. Guys, it actually says in Galatians 6, if you believe that, you're deceived. It doesn't happen. It just doesn't happen. In the stock market, in the real estate market, if you're a long-term disciplined investor, you're going to do 8, 10%. In a really good decade, you'll do 14, 16. In a really bad decade, you'll break even. Over the long term, a disciplined investor that's not emotional is going to do an 8, 10% return, all right? Minor exceptions to that, very, very few outliers, okay? And it's probably not the people you're watching on a webinar, all right? Ray Dalio is not on a webinar saying, here's how you should invest your money so that you can get a 15% return, all right? So, how is wealth generated then? By business owners. Again, the millionaire next door. These are guys that built businesses, invested in themselves, right? Who's on the $100 bill? It's Benjamin Franklin. An investment in knowledge pays the best dividend. So these business owners, they're working on their business. They're getting smart. IQ, not just smart, but they're implementing their smarts. They got to be smart where it counts. They're implementing it, and that's how wealth is created. That's the only place that I know of where I've been able to turn 100 grand into a million into 10 million. I know if I put money in the stock market, put in 100 grand, in 7 years it's going to be 200 grand, give or take, right? I mean, that's just how the game works. It works in real estate. I've invested tens of millions in real estate. That's how that game works. All right. So I want to share with you why putting time into that pro forma works. The very first location I built, it was a Black Angus. And I went in there, 12,000 square feet. I ripped it out. It had gone bankrupt, and I put in an aquarium. 12,000 square feet wasn't that big. Just spent a couple $1,000,000 on it. So every dollar I had. And someone came a couple weeks after we opened and said, I can't believe you turned a strip club into an aquarium. And I'm like, no, this was a Black Angus. And she says, oh, no, this was a strip club. It was a Black Angus, and then it was a strip club. I'm like, oh, man. Called the realtor, and I explained to the realtor what full disclosure means. But I spent probably 10 or 15 hours on the blueprints for that location. And it was about $6,000. Now, and I know this very well because in Massapequa, New York, I planned on putting up a location. And I spent about 150 hours on my blueprints. Now, the strategy guide, this is your blueprint, all right? Are you going to spend an hour on it, 6 hours on it, 60 hours on it? I'm telling you that now, when I'm building my 15th, 16th, 17th location, I'm putting $100,000 into what every last detail. Here's the light, here's the brand of the light, here's how much the light costs and where you buy it from, here's how many inches the light is from the water monitor. Here's the basking temperature, here's the ambient temperature. Those blueprints are now 96 pages of a Word document and 70 pages of just these giant blueprints. And every little detail is there. There's structural blueprints, right, for the weight of the acrylic. There are blueprints for, obviously, for the HVAC, for the demolition. When we go into a location, we go into the mall and we take over like 8 or 10 different spots and we're ripping them out. We put together blueprints for that because we want to keep some of the things that are there. That's what you're doing. When you're building your business, your blueprints have to be that good. The better your blueprints are, this is out of Walt Disney's book, the better your blueprints, the more money you spend and the more time you spend on your business blueprints, the less money it's going to cost you to build it, the faster you can build it, and the less headache, the less turmoil, and the less wasted time, wasted energy, wasted human capital, all right? So if I'm driving home this point with a sledgehammer, it's because it is that important. Details in your strategic blueprint, all right? That's what we're developing right now, all right? We got 5.5 hours or so left to do it, I guess. I want to go to profit margins, all right? Because a lot of businesses, it's interesting, when I was in my consulting business a decade ago, I had a consulting investment business, enjoyed that, but it wasn't ultimately where I wanted to go, but I truly enjoyed it. And I remember learning something in that business, and I'd sit down with a client that had net profits of $300,000 a year. And his collections, he had collected in revenue $600,000, all right, so 50% profit margin. And I remember someone in the exact same field, he was a medical professional, that did $2.5 million. And his net earnings were less, where they were less than the $300,000, like $250,000. Profit margin is the bottom line. Literally, it's the bottom line. Is how much money am I making? Expenses, my revenue, my expenses, how much is left, and what is the profit margin? I'm going to go over specifically what we've done to increase our profit margin. Because I've been in business when profit margin was negative, and I've been in business where profit margin was really, really high, and I've worked with lots of businesses where the profit margin was pretty skinny. We're talking 5-10%, which isn't too uncommon, by the way. If you were to look at Amazon and how much money they collect versus their profit margin, or Microsoft, or Apple, we're talking about 5 to 20% profit margins. They're not huge. Now, of course, when you're in the $100 billion a year in revenue, you don't need a 40% profit margin. But most of us, if our business is doing $2 million a year, we probably want to get a 20-30% profit margin to really have a real independence. And if that number sounds too high, if you're thinking, no, I don't need $500,000 a year, I can tell you that if you look at wealthy people when they're 60, 70 years old, and how much money you're going to need to pull out, what you're going to be paying in taxes, and how much you're netting, and inflation in the future, you're going to need to build a multi-million-dollar nest egg, all right? I could take a lot of time and explain to you why I'm convinced, and I believe I could convince anybody that that's going to be necessary, unless you're kind of a minimalist. But if you just look at how much money the government spent, the highest deficit our government's ever had, 2009-10, it was like $1 trillion, all right? This year, it's like $4 trillion. Plus, the feds are printing trillions on top of it. That didn't happen in our history until a decade ago. And now they just fired at the printing presses. Tens of billions per month being spent, all right? So, what does that mean? That means that if we just went from a $22 to a $26 trillion debt in this country, and the revenue, the tax receipts for our country went down, that's like a household with $100,000 income and $300,000 in debt, that goes to 400 grand in debt when their income goes down to 80. That's not good. So how do you fix that? Well, the government likes to raise taxes. So you should be looking for increase in taxes. That means you need to have a higher bottom line. If taxes go up by 20%, your bottom line goes up by 20%, you don't make any more money, right? Net in your pocket, net of taxes, all right? So we got to have some money in the bank. We got to have some plans here. I would list, and I've done this many times, and I always keep a list for all my businesses and all the businesses that we're associated with that we work with. I want to see everything that that you have on recurring expenses. Everything, right there. And then I can tell you, I've done this two ways. I've gone through and had go to my accountant and my controller team and said, can you find anything that we should be cutting? And the answer was always, nah, we're good. When I go to them and I say, I need you to go find 3%. Now, when your expenses are $30 million a year like mine, and you find 3%, it's a decent chunk of change. It's a meaningful dollar figure, right? We're getting close to a 7-figure savings. I need you to go shave 3% because we got skinny over here. It was a mild summer, whatever. I need to go shave 3%. That's when you say, that is your job, come to me and show me what is the 3% we're shaving. Then there's not these sacred cows where I'm afraid to cut that. I've written down, I'm going to write this down for you. Write this down. This may seem silly, but this one little thing I learned in 2002. Had dinner with an author named Peter Jennings. And he showed me this acronym right here, I'm going to show you. What's the good business reason for doing this? It seems a little simplistic, I know, but here's the reality. You look at something and you say, what is that doing for our business? Do I need those licenses at this time? Should I pause them? Should I suspend them? All right? Do we have questions in the chat log, by the way, you want me to hit? Not yet. Okay, we're good. All right, by the way, we'll answer your questions live time. So if you have a question, we'll hit it. I'll be looking on the chat log here. All right, so I'm looking through every expense on a frequent basis, and I assign this to somebody, and until I know they're doing it, my eyes are on it. Until I know for sure they don't need me looking at it, I'm personally making sure that it's happening, all right? Next one. And we just went over this yesterday with a client that does millions, and that is, what is your capacity utilization? All right, so think of a Toyota factory or a Tesla factory, and the Tesla factory can make 100 cars per day if everybody's there fully employed, fully engaged, and fully productive. If that's the case, then how many cars are they making? And if they're making 60, they're not hitting their economies of scale. So then it becomes critical to maximize profit margins to increase capacity. It's capacity utilization. So write down your capacity utilization right now. If I'm a restaurant owner, if I could feed 300 customers today and I'm feeding 150, my goal is, how do I get in the 150? Is it elasticity of my price, meaning if I drop my price by 20%, will they come in? And if so, if my profit margin is more than 20% on my variable cost, then I should bring them in. Let me explain what I mean by that. This is complicated. I've got my fixed costs that I'm going to have every month no matter what, right? But beyond that, having a new customer come in, I'm only paying maybe for the price of food. Or if I'm an electrical service, I'm only paying for the labor of those people that are working extra, or maybe they're still working whether they've got a job or not, in which case, bringing on a new customer, I'm only spending 20 cents. If they give me $10,000, it only costs me 20 cents. Now, that doesn't mean I have an 80% profit margin because I've got fixed costs, right? So when I blend the fixed and variable costs together, what then is my profit margin? That's what I'm looking to identify. And I need to figure out how to get to max utilization. And again, I'm looking at pricing, I'm looking at my marketing, I'm looking at what I should be spending on my marketing. Okay? All right, I want to go over cost cutting for a minute. I talked about recurring expenses. The other thing that we see a lot of is if you were to do an analysis of your insurances. I always like to see, we spend $500-600 grand a year on insurance, and I'm always, at least every quarter, looking at everything. I start with the big ones, and I'm going to spend the most time on the insurances that I spend $100 grand a year on, and then the ones I spend $30 a year on, and a little less time on the ones that are 5 or 10 grand a year. We've got lots of those things, or auto or umbrella, whatever, that are cheaper. I'm going to have other people that are studying those and looking at those, but I personally, hoping that I'm the guy that really understands this well, and my most analytical people, my most frugal people, that they're going to have their eyes on the ball, and they're going to say, oh, yep, I can see here that our deductible is too low. We have a coverage overlap where we're paying for this policy, and if we customize that and we shave this, it'll save us 30%. Or if we shop it to a different carrier, it'll save us 30%. So it's business. I don't care if you go golfing with your insurance guy. It's business, right? You've got to, if I'm spending $500 grand a year on my insurance, I hope my golfing buddy gets me to where if there's a way to just do it for $400 grand a year that he tells me about it. But if he doesn't, I got to be responsible ultimately. I got to be the guy that goes out and gets it done. Most businesses, in fact, I've not seen a business, let's put it that way. I've not seen a business that wasn't spending more than they should on their insurance, all right? Or had lapses or gaps, okay? Or I should say overlap. I didn't mean lapses. All right. There's another strategy that I'm going to share that we've utilized, and it saved us hundreds of thousands of dollars in the last 3-4 months. All right, and it's this. When I put this up, actually, some of the social media outlets put this down, but I actually made a video on this, so I'm going to tell you again. One of the things that the government did, and unfortunately the government, they're not small business owners. They really don't need to worry too much about revenue and expenses because they can just tax you and they can just spend, and they have an unlimited credit card. So they're not thinking policy from a business owner standpoint, in my experience, the way I measure it. And I'll give you an example. When you have let's say you have 100 people. We have 450 people that work for Sequest. Well, that was pre-COVID. Now it's probably 300, and as we open more sites and get busier, we'll get back to our 450. So 450 people, and most of them are, 12, 15, 18 bucks an hour, okay? In most of these states, unemployment plus $600 from the government is more. It's 20, 23, 24 bucks an hour in some states. And they were making 18. If I call them and say you got your job back, I just said instead of sitting at home making 20 bucks an hour, you're going to come to work and make 15 or 12 or 10, right? We have some people that make 10. They're high school kids or they're college kids, and this is their first or second career. And I just gave them a 50% pay cut to come back and work. It's a crappy deal. It's a crappy deal for everybody. So what did we do? We developed a strategy within about 10 days. And it was, honestly, I'm bummed about that 10 days, because if I had figured out 10 days faster, it would have saved me 50 grand. But on the 10th or 11th day, we figured this out, and it's this. If you bring people back at 10, 15, 20 hours under the unemployment amount and pay them a smaller amount, they can be engaged with their team. They can keep their skills sharp. They can know that they're in line to come back, because guess what? There used to be this many jobs, and now there's this many jobs. You want to, when the 600 a week's gone, you want to be the person that's there with your foot in the door, engaged, so that you get to go back to work, right? So we had people across the country in 12 states that did exactly that. They took a big pay cut from us, but with the extra 600 they still qualified for, with some state benefits, they continued to get more per hour. So now if you look at the actual number of hours they're working and the total amount they're getting, it's like 35 bucks an hour, right? But these are people that made 10 bucks, 12 bucks an hour, right? So that strategy is a win for the business. It's a win for the employee. And I don't know too many people doing it unless the people have been following me. But it is a way to save your business a lot of money. Now, if they extend the 600 a week, then you can do that for a longer period of time. If they don't, then obviously that ends here pretty soon. Most businesses, unless they have a strategic, strategy is so important, it's in the name of our company, VC Strategic. Everything comes back to strategy. when we look at most businesses, their tax returns and what they're doing, they are compliant, okay? They're not strategic with their tax planning. It's, okay, give me your QuickBooks file, we'll spit this out, here you go. And that's it. And here's your $1,000 per entity bill. Or maybe it's $2,000 per bill if your CPA is a little bit on the higher cost or there's more complicated books. But are you sitting down off season, not during the March or April when the CPA is hammered, and actually going over strategy? And by the way, that's the exception. Most CPAs, that's not how they operate. They're not strategic, they're compliant. You've got to be strategic in your taxes. For a business owner that nets $1 million a year, we see most of them will pay about $350 in taxes. With strategic tax planning, that number in some cases gets cut in half. I've seen it not 5 or 10 times, but 30 or 50 times, okay? With myself and with a lot of our clients, people that I've worked with. Finally, one more thought on cost cutting, and that is you're going to get spending requests. Can I get these new computer monitors? Can I buy this new vehicle? Can we upgrade the Toyota? Can we do this? And the key is just to learn to say no, unless it's necessary. Again, what's the good business reason for doing this? Is the employee going to stay longer? Is it going to help with attrition? Is the better truck going to get you more customers? Is the 80-inch big screen TV that's in your foyer going to keep somebody, a customer, longer? Is it going to turn a customer into a buyer? In a lot of cases, it's not, which means say no. And sometimes somebody wants to get this cool subscription to something or buy this new fancy toy, whatever it is. You got to look at it and say, if I spend 10 grand on that thing you're asking for, or by the way, I keep saying 10 grand because those are the numbers we work in, but if you're a smaller business that does $500,000 a year and your net profits may be 100 a year, or you're a startup, it's even more important. Do I need that camera or should I subcontract that out? Do I need to pay this much for these chairs and these desks? Or if nobody sees the desks, can't I just buy them on Craigslist? I can't tell you how many millions of dollars have come across my desk all the time where I've said, nope, don't need it, nope, don't need it. And I'm not afraid to disappoint somebody, right? You've got to be the boss. You've got to say, thank you, but we don't need that. Or tell me what's the good business reason for doing that, Mrs. Employee? And have them explain to you the value. And maybe there is. And maybe you, at first glance, are wrong about it. And I've had that many times where I'm like, nope, I don't want them traveling to that state. I don't want to pay $3,000 for travel. Don't send them. And someone will then say, but if they do this, it'll save these people because these people aren't trained on this and blah, 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 right? And I'm like, you're right. Go spend the $3,000. But I find normally if I say no, and there's not a good business reason for doing it, then unless there really is, I don't hear about it again. And if there is a good business reason for it again, then they'll come back. It happened to me yesterday. Yesterday he came to me and said, actually, I think it was on travel. It was on $3,000 worth of travel. I said, yeah, you're right. In fact, he didn't even ask me. He says, no, we need to do it. Here's why I need to do it. And that's how confident he was that we needed to spend. But a lot of these $10,000, $50,000 deals, that's a big piece of it. Let me say one more thing. Slightly different category, but it's super important. And that is you've got to be able to negotiate deals. So when someone comes to you and says, this is $300 a month, and we need 10 of them, for us, that's $3,000 a month, that's $36,000 a year. If I can go, and by the way, that's $360,000 over a decade. Are you going to go back in 6 months or 18 months and renegotiate it? Probably not. Right when you put a deal together on something you're probably going to be keeping, you've got to always go big on asking for discounts. Go big on being aggressive. Ask big. And be patient. When I built San Antonio, an aquarium down there, extremely successful. That location, I made an offer and I lowballed the ever-loving heck out of them. The place had been vacant for 5 years. They said, no way. Came back to me in a month, said, how about this? Came back to me a month later, what about this? Nope. It was a year. I wanted the thing so bad. I would be on my date night, and my wife's like, can we talk about something else? I'm like, Kim, if they say yes at this price, I got a deal. I got an asset. This thing's huge, right? And I was just wanted it so bad, but I sure the heck am not going to say that when I'm talking to him, right? So I know I got to wait that out, be patient, be willing to risk not getting it to get a fantastic deal. You've got to be able to negotiate, all right? Now, one more cost I want to go over, and that's cost of getting a new customer versus and keeping a new customer, okay? Both of these are important, and both of these balance out. They have to kind of be weighed because they're both actual costs. There's a cost to keeping a customer happy, and some customers are more expensive to keep happy than others, in which case there's times to fire those customers, and we've done that. But then the cost to buy a new customer. I say buy a new customer because certainly the best deal is to get an organic customer. Somebody where they were referred, it was word of mouth. That's SEO, by the way. SEO is word of mouth, right? That's how SEO is done. People look at the phone, they're looking at reviews. We've got like 15,000 reviews in my company that are 5 stars, all right? That's how important reviews are. So if you've got 20 reviews and it's 3.9, that's a mess. You're losing business right there. Cost a new customer is higher if your reviews are low or if you don't have a ton of reviews. I was talking to one of our clients yesterday, and he's got 4.9 star average rating, and he had 70 reviews. Pretty darn good. Do we have a chat yet?
We do have a question.
Okay, let's hear it.
How do you make the business plan if you don't have capital to get started?
Okay, so a business plan that we're talking about, you look at the strategy guide right now, right? That strategy guide is free, right? So then the question, Vicki, is how much, the business plan you don't need money for. The business, then you have to look at it and say, what are my options? How small can I start to originally begin by making money? And can I start by leasing, by borrowing, or do I need to partner with somebody? Will the bank loan me money? Do I have a credit card? And you have to weigh all those different options. So there's writing a business plan that costs nothing, and then there's getting started in business, which depending on the business you want to be in, and if you want to put in the chat log those questions, Vicki, I'm happy to go through, what type of business it is, but some people have in their mind, I've got to start with an office space. Well, my living room was my first office. I've got to start with 3 trucks, or I've got to start with 2 employees. Well, maybe I can, if I'm starting a bakery, I do it myself, and I do them out of my home before I rent a space, before I get an employee. And if you're going to do that, by the way, read the E-Myth Revisited. It's actually about a baker, and it's a pretty awesome book. So Vicki, hopefully that helps. If I see more chats on that, I'll answer more of those questions as well. So thank you for that. By the way, anyone else, feel free to throw in more questions. All right. So value of a new customer then. We talked about retention. It's almost always cheaper to keep a client happy, a customer happy, than to get a new one. So there's got to be a focus on adding value, increasing value, touching them. For my 20-year anniversary yesterday, I got a massage with my wife. You can tell a good massage therapist, they almost always leave their hand on you, even if they're circling their table, right? They're always touching you. You want to be touching your customers all the time and adding value. That's how we keep a customer happy. I'm touching them, I'm adding value, all right? And I want to have recurring scheduled touches. Emails, I want them engaged on my social media. I want content that's relevant to them. All of that's part of the plan of keeping a current customer and word of mouth to get a new customer. Now, let's talk about buying a new customer then, because you can purchase customers. That's what pay-per-click is. That's what buying a billboard is. By the way, we're going to get to data in a minute. If you were to look at the $600 billion that is spent globally per year on marketing, TV, radio, billboards, print, if that's been your business strategy for marketing, you're going to want to cut bait real soon. Those numbers are down by $50 billion. It's over here where the eyeballs are on social media and where they can pick up their phone and make a purchase right then and there. It's mobile. One of the digital guys here showed me yesterday the difference between a guy who had a great desktop site but had a terrible mobile site. And it's just, how many times people make that mistake. We talked about putting $100,000 in a mutual fund, and in 7 years that being worth $200,000. That's probably something like that, right? When you put $100,000 into marketing, into growing your business, and those two are slightly different but same concept. It's getting new customers, it's increasing revenue. When you invest into that, so I've got my brains on it, so it's the highest and best use of my capital, and I've got my money in it, then I need to look at how much time does it take for me to get my $100,000 back from a new customer. All right, so what is a customer worth? You've got to know the cost to acquire a new customer. And in 2 weeks, We're going to dig into this, and I'm going to show you the specifics because that's our sales and marketing call. But I want to mention it here because this has to do heavily with profit margin. These are all tied together, all right? We started with the pro forma data because we're going to keep going back to that. This piece goes back to that. In my pro forma, how much am I spending increasing revenue? Well, I've got to look at how much does it cost me to get a new customer, and I have different customer brackets. These customers are worth 10 grand a year. These are worth $1,000 a year. These are worth 500 bucks a year. These cost me this much to buy. This department, I make this much and I spend this much marketing. In this department or with this service, I spend this much and I get this much. And when you look at those, what's my highest revenue department or product or service? And how much am I spending getting new people in for that service? And you look at it and say, why am I doing this? When people buy companies, when companies merge, the smart company normally buys this other company and says, yep, I'm going to, in fact, if you've seen, what's that, Tommy Boy? When you see Tommy Boy, right? Why did they want to buy Callahan Auto? Because they could go and break the company apart and sell the parts, right? That's because Tommy and his dad were actually probably not getting the best return on equity of Callahan Auto. So they weren't cashing in the brand equity on that. They ought to watch that in MBA school. It's a good movie, and it's funny. So I'm looking at each of my departments, each of my services, revenue per client, cost per client. If I spend 100 grand, does it take me 6 months, 9 months, 18 months to get that 100 back? That's the first question. And then once I'm at break even, how valuable is that relationship over the life of that client? Okay, so it's like a really good bond. I put in 100 grand with a bond. Most bonds are going to pay me 6,000 or 8,000 bucks a year. Or in this market, a really safe bond is going to pay me 2 grand a year, right? Or 1,000 bucks a year with super low interest rates. But 100 grand in my business, if I'm working on it and I've got a good strategy, good business plan, how much is that going to pay me? All right. Now, let me shift gears then. Let me finish that one out. 100 grand, if the value of that client or the attrition, the client stays with me an average of 6 years, you got to know how long clients can stick with you, right? If they stick with me for 6 years, then I know that I spent this much and that's the value of that client. To me, that's how you turn 100 grand into $1 million, is in your business, by getting new customers, by expanding, by increasing your profit margin, all right? Now, let me talk about data. Data is gold. One of my best friends said it to me the other day on a call. We were just talking about it. It's why I co-founded this company, Blue IQ, because business owners struggle to interpret their data, know what to do with their data, and to get accurate data. So there's the data from your business, from your QuickBooks, from your key performance indicators. You've got to measure everything. Bill Gates, he says, all the great business owners I know are maniacal about measuring things, okay? So my favorite, I read, in the last 10 years, I've read 520 books, all right? Read a book a week. Read for about an hour and a half every morning, hour and a half every night. And sometimes it's double that if it's a slow business day for me. So I read a ton. I consume this stuff, and then I write down. The best single quote, nugget of truth about management and performance is this: when performance is measured, performance improves. When performance is reported back, the rate of improvement accelerates, meaning they get better faster, and the performance goes up, and it goes up at a faster rate. Measure everything. Measure it on the whiteboard. Measure it on your Excel sheets. Measure it everywhere. And when I say put it on a whiteboard, I want social pressure. I want everybody that's walking by saying, oh, look how Bob's doing. He's got 18 sales. He's got 14, he's got 1.5 minute wait time, whatever it is. You've got to have that there, all right? Now, there's that data, and then there's the other data of just information, where in every minute there's more information thrown out there than you can consume in your entire lifetime. Most of it is Chicken Little, the sky is falling. Oh, we've got no number of new cases, everybody needs to do this, you need to stay home, can't go out. Look at the number of deaths, down 80%. Look at the data, look at charts. Look at the reality. I'm going to tell you my 2 best sources for data. Ready for this? Again, I'm giving you the recipe. I follow Virtual Capitalist, awesome charts. They don't pay me. I don't know anybody there, but I get an email every day, and I look at the charts, and I'm like, wow, that's the value of brand equity. I had no idea Microsoft had that much in intangible brand equity when 30 years ago, the companies that had a high, $100 billion value, it was in assets. not in these intangibles, right? I'm looking at all of this data, consumer spending, and then I follow First Trust, my favorite economist. Again, I've invested in them, but I certainly don't own any of it, but I have in the past put millions of my clients' money into First Trust. I think they're a good outfit. I don't want to speak to whether or not it's better than any other investment, but I will say this: their data and their charts are fantastic, and they help you to extrapolate data and say, that's what that could mean for me. Consumer spending, or unemployment, or these trends, or whatever it is. I have that data in a clear, non-Chicken Little chart. Chicken Little is the one who says sky is falling, right? That's the media. They're not in the business of making your business successful. They're not in the business of getting you good information. They're in the business of fear, all right? Fear. One more formula. And I know I'm short on time, but watch this. This is big. F equals 2.4G. Fear, and all the media channels know this, and when I say all, I mean all, okay? I got some of my friends, oh, no, this news channel, they're the only honest one. Nope. There's not an honest news channel, period. None of them. And I know because I've had more articles written about me that I'm like, that? How did they possibly get that, right? It's crazy. There's crazy talk out there, all right? So, fear is 2.5 times more powerful than greed. And this is what sells. That's what's in the newspapers. Ignore it. It's irrelevant. That's not where you get your data. That's not the data or the information you use to make your business decisions, all right? Okay. I think we're probably getting here near the end. Let's see. I'm going to talk about part of your homework. Take some time and learn. Watch my videos on Standard of Truth about strength, weakness, opportunity, threat, what to do with them. The pastel. You'll see my pastel analysis, what to do with that. Do that for your business, all right? So I'm going to talk about how you raise your implementation quotient. How do you raise your IQ? In other words, how do you take some of the things we just talked about, which are complex, probably feels maybe like a fire hose here, but how do we then take them and raise your IQ? And I'm going to give you some things. First, some principles. If you look at the questions in your workbook, there's 4 pages, but it's just some questions, and for you to just write down, challenge everything, think outside the box, and be thinking, okay, what does that question mean for me? You'll see the questions in your guidebook, all right? Start reading every day. Time block it. Treat it as sacred time. As I look at what the experiences I had in books this morning and in literature, it's incredible. I'm so glad that's how I started my day. It was awesome. Follow VC Strategic. Facebook's the best way to do that. I'm going to start putting uploads of the forums and the guides that we talked about. Next week, I'll start putting a lot of those downloads on there so you'll be able to just work on them. Work on your business. Get out of the assembly line and just start focusing on, okay, I see it. I'm 30,000 feet away now. I'm watching it. I can see. And that's the idea, right? I'm triggering questions. That's why those questions are on there. All right, remember, I want to drop the water buckets where I'm always working. If I want water, I've got to pick a water bucket and move it. If I'm building my business, if I'm building a pipeline, I flip a switch and the water goes. And now I've got an asset that drives wealth for my family forever, all right? The last thing I would say, and I'll conclude with this because we're right at the 60-minute mark, and that is in 2017, I had this deep emotional stress because I was millions short. We had a private equity company say, we're going to give you $20 million. And 4 days before closing, great company, I get it, I understand it, but 4 days before closing, after spending 150 hours going through every lease, every contract, revenues, books, everything, they said, hey, there's no $20 million. And it's because, you know, look, we're worried about this industry, worried about these things, and they backed out. And I had made commitments, I had done blueprints, I had done a lot of work in 3 different cities based upon that $20 million. I'm like, I didn't have that. And it was a dumb decision on my part. Won't do that again. But I also at that time had so much fear. And I realized, I think this year is different. I keep saying this to my friends. This year, I've just decided to be obedient to God's word when he says, don't fear. So if I have fear in my heart, I then quickly now I've programmed, it's now my DNA. And I love it because it's like, if I have fear or doubt, Those didn't come from God. Those didn't come from Heavenly Father. So I can just take that out and say, I'm not going to let that came from the other side. That came from the opposition, and I'm not going to take that. So for me, the 2017 experience and where I've come in 2020, that emotional piece, because I'll tell you, if you're emotionally stressed, your employees are going to see it, your team members are going to see it, and you're not going to be able to think. You're going to be clouded by that, your judgment's going to be clouded by those emotional just millstones, all right? So I would say decide now to be obedient to that spirit that tells you, I'm going to have a spirit of inspiration, of love, of being able to be positive. Know that you look at 200 years of our country's history. We've had so many, 9/11, World War II. We've had so many times where this has happened. In that little moment, you have the recency bias, where you just place undue emphasis on the things that have happened when the reality is that's not as bad as it seems. And it's going to get better, and everything's going to be okay. Again, root that spirit of fear, that spirit of doubt doesn't come from Heavenly Father. It comes from the opposition. And so that for business owners, for me this year, as I talk to my friends, they're like, dude, how can you handle losing 50 grand every single day? Well, now that we're open, we're only losing 30 grand a day because people aren't showing up yet. But we'll get there. Whether it's a vaccine or whatever, we'll get back there again. People are going to come in and they're going to enjoy the planet, and our other businesses are thriving. And so things always have a way of working out. Anyway, thank you so much for joining me today. It's been fun to do this. I love teaching. I love teaching business truth. I love teaching eternal truth. I do the one on my Standard of Truth channel. I teach the business truths and just business strategies and tactics on the VC Strategic page. And so I encourage you to follow those. And thank you so much. We'll hope to see all of you next week on our 10 a.m. Thursday Mountain Time call. That one is going to be a sit-down, question-answer, just working together, going through your questions, your concerns, your business blueprints, and how we can work through and implement that. Raise your IQ on that. Thanks for being with me, everybody.